Welcome. I'm Catherine Magana here with Rachel Ivanovich, Vince Stefano, and Greg Carroll, where we're here to provide you insights on the markets, tax planning, and much more. Today is April 30th. I can't believe we're already at the end of April. Goodness, this year just flying by. But here we are. We're still dealing with the Strait of Hormuz. We've had a lot of earnings that have come through, especially from part of the Magnificent Seven has reported. We've heard from the Fed. The Fed didn't cut rates, which we kind of anticipated. However, some of the news that came up was that the Chairman Powell will stay on the board after his term ends on May 15th. So
He's trying to stick it to
right?
Trump.
That's weird because
most have unfinished business. I think it's just with Trump.
And that's odd because most of the time the Fed chairs, they do resign and they just
bow out.
Slide out and go back to the academic world.
He's not leaving.
He's not leaving. He's mad at Donald.
And so looking at over the last week, so as of yesterday's close, yesterday was April 29th, the Dow Jones was actually down from last week. The NASDAQ was pretty much flat to up a little bit. The S&P was pretty much flat to up slightly since last week, and the Russell 2000 was actually down from last week. However, stay tuned because as of this morning and today, we have the markets have kind of rebounded, at least in certain sectors. So the S&P 500 is actually up this morning. The Dow Jones is up the most, about 1.5% approximately. But the one that's kind of getting hit right now is the NASDAQ, which is down about 2.34. So kind of looking at where we're at, the S&P and the Dow would actually be, Dow Jones would be up now, but with the NASDAQ pulling back a little bit. And we'll talk about that in just a moment. So once again, for most of these sectors, we're actually in the, we're investment-wise, we're still in the green. So we're obviously in the positive year to date. But kind of taking a step back, so we did hear, once again, some earnings that came out. And it was interesting because some of the earnings that came out was they were positive, but there's actually pullback in a lot of these stocks. And I think that was because of some of the AI expenditures, which I think hopefully Vince will allude to.
That number just keeps growing, how much they're spending on data centers and all the chips and everything else. So it's 700 billion I'm hearing now this year.
That's what I heard this morning.
Yeah.
700 billion.
Wow, it's a lot.
And, it's kind of interesting. You just touched on that, the Dow is up pretty big today. And most of that's because a couple of Dow components had some really good earnings. So that magnifier effect in the Dow, is obviously boosting it quite a bit. In fact, I think I heard of 600 Dow points. I think 2 or 3 stocks accounted for about 550 of those Dow points. So, there you go with the Dow. The other indices, as you mentioned, are only up slightly. In fact, when I left, the NASDAQ had turned, I think, positive or was flat on the day. So, I mean, it was doing absolutely nothing. And the real culprit, technology stocks. 4 of the Mag 7 reported yesterday, 1 up, 3 down. Sounds like a baseball game or something. And interesting, like you said, I mean, the earnings reports were very solid. Most of these companies beat on the revenue, beat on the bottom line, but CapEx spending has, kept investors on the sideline. And, the monetization, we've been talking about this, monetization of AI seems to be pushed out another maybe 6 months or so. So again, look to the end of the year and into 2027 for the monetization to begin. And if that truly happens, then you may see some of these names start to move prior to, because the market always anticipates 6 months beforehand. I think that would happen today. I think that you had some of these technology names had a big run from where they were back in March. So I think went from a little bit oversold to a little bit overbought. And even though the earnings reports were good, it's kind of like buy on rumors, sell on news. So I think you got a little bit of a hit today. Also, part of it, I think, was the algorithmic trading. I think a lot of the computer trading came in. They keyed on some sentences that were in the corporate outlook, and I think they sold off some of these names because of that. I thought some of these, when I saw the earnings reports yesterday afternoon, I thought these stocks were going to be up really big today.
So did I. I was a little
but they're not.
surprised.
Yeah,
That's why I was like, I had to do a double take, and then
Yeah.
I realized I think it was just kind of the future of what their spending is.
So I think they sold off a little more than normal. And again, if you can tolerate the volatility, obviously if you don't own these stocks, maybe you begin to take a position. If you do own them, maybe you can, maybe you buy down on some of these dips. And I think that these stocks are not going away. And kind of like the old technology way, when you want to really be a leader in your field, when things begin to look, you start buying and start expanding your market share early on. That way you can continue to sell product into more and more market share. And I think that's what some of these big tech companies are doing right now, is they're actually looking to spend a lot of money so that they can actually benefit from that in another 18 months to 2 years.
So let's talk a little bit about kind of where we're at with interest rates. So I do like to report kind of where we're at each week. So this week, the one-year CD is at 3.9%, which is slightly down from last week. And then the U.S. Treasury 1 year is at 3.84%, which is slightly up from last week. So once again, it's not uncommon to see CD rates and the Treasury rates fall in and out of favor of each other. But it looks like they've held pretty consistent over the last several weeks. It's just the CD rates have come down slightly. And then looking at mortgage rates, so as of this morning, the 30-year is at 6.39% and the 15-year at 5.75%. So not too much change over the last several weeks there. And then the news that came out this morning, looks like GDP grew at 2%, which came in a little lower than consensus, but also I think with what's happening with the conflict in Iran and I think the reason they said that the GDP grew is because of the AI investment boost. So obviously that's something that we continue to look at as well. And then I thought I'd share where we're at with the fear and greed. So I took a look at where we're
I
at.
was going to ask that.
So it was interesting because I looked at it this morning early on, and it was at 64. And then right before we came in here, I wanted to take a peek because the markets have been fluctuating a little bit, some of it to the positive. And so right now it's at 65. So we have pulled back from last week. We were at 68 last week, and now we're at 65, which is greed. So once again, I think overall, when you look at your investments year to date, once again, as of yesterday's close, the Dow Jones was up 1.66, the NASDAQ was up 6.16, the S&P 500 4.24, and the Russell 2000 10.38. So obviously, we not considering today's returns, but I think even after today, we're going to see that we're still in positive returns for the year. But after having conversations with clients, and I think everyone just kind of like every day there's a new headline, what's happening, and but for the most part, I think everyone's being patient and holding tight. And obviously we're not going to make major changes, but along the way there could be some opportunities.
I think there is a lot of concern out there, but nobody is panicking.
Yeah.
They're not making changes. But I'm getting more and more calls about what are we going to do if this and that. And, I think sometimes just kind of sitting back and re-looking at your portfolio and, looking where you want to be on offense, look where you want to be on defense, and flexibility, I think, really matters. So having liquid assets, short-term money market, CDs, things like that. But, choose your AI companies, for a little bit of offense, get good, high-quality companies that, Vince, you talk about all the time. And then, I think the key is looking for some innovation. The companies that are going to really accelerate because of the innovation with AI. There's biotech, there's healthcare, there's a lot of different industries that could benefit from that. Defense. I mean, we're still getting paid for bonds. Since we're at zero interest rates for like 10 years, and about 4 years ago we finally brought the interest rate environment off the mat. So. And dividend growers, you can still get some good dividend companies, and alternatives. Really, real assets, gold, energy, things like that are really performing well, especially if we stay in this higher inflationary environment, due to what's going on over in Iran. I think we're going to stay higher for longer is kind of what I'm feeling, because this conflict is not over. There's definitely more to come. So, just keep some liquid assets, liquid powder for any dislocations, from whatever happens over there or what else might, come along. But there'll be better opportunities. Just if you know what you own and you have a plan, you're going to be able to sleep much more at night.
Well, it's interesting because, like you mentioned, I think the conflict is going to last a little longer, and the Hormuz is definitely.
It sounds like we're just getting ready.
I just
to
saw we're
figure
trying
it
to do a coalition, and it seems like there's just, I don't know. It's open, it's closed. We're getting different.
Who's
headlines.
blocking who?
Yeah. So I definitely feel like it's going to take a little bit longer than we anticipated.
Well, talking, just kind of go down your defensive road. To all of my clients out there, I know I've been carrying a little more outsized cash than usual. Mm-hmm. And, I don't think that's really hurting. The volatility in this market has been pretty scary. And, you're up and down, big amounts from day to day, depending on headline news. And again, I think that sometimes keeping your hands and feet inside the ride isn't all that bad. We have had a pretty good run, since March. So, we're, flatlining to being up a little bit. So I know the cash is in, and people called me and said, hey, we've got a lot of cash. But, again, sometimes, you look at stocks and you say, wait a minute, some of these things are on big spikes. Do I want to buy the spike? And, you start waiting for a little bit of a pullback. And like you said, I don't know what's going to happen. Mm-hmm. If we start bombing again, what happens? So maybe, this cash in the next 3 weeks will be very advantageous and used as a way to, buy a little bit lower. Doesn't feel like it's burning a hole in my pocket. That's
no. When you get money markets 3.5%, 4%, short-term bond ETFs. There's a lot of places to just park it, get a nice yield, and wait for those opportunities. But yeah, headlines come and go every day, and things are spiking and dropping. And you get these trillion-dollar companies dropping 10% in a day. That's a lot of.
I got two of them today.
Yeah.
Is that why you came in? Is that what happened to your smile this morning?
Oh man, I'll tell you, I've had two today.
Turned upside down.
And
All right. So over this last week, Rachel and I had opportunity to talk with a prospective client. We've actually been talking to them for several weeks now. And
more than that, almost a year.
Yeah, it's been a long time. So
seems like it was yesterday.
And so one of the things as we wanted to share is as we were going through the financial planning and retirement planning process.
It was great. It was like Easter egg hunting.
And so we go through it, we have a plan, and we're ready. And
they're like, wait, what about that other pay? Oh, I have $200,000. Wait, did I include that? And they're talking to each other. Yeah. And all of a sudden they have $400,000 more.
And there's other IRAs, and they have 401ks, and there's stuff everywhere. And so
we
were, long story short, we finally, I think, have everything. We have our investment proposal and some strategies to implement. And so once again, it's building up the plan.
Well, what's interesting is what triggered this whole thing was that he got laid off.
True.
And he's in his 60s, and he's, having fun surfing and taking some time off. And he's like, well, kind of joking, well, can I retire? Do we have enough? And based on the first couple go-arounds, we did it, but then he found a few more accounts.
Yeah.
It's like, wait a minute, everything changes when you have more assets to work with.
So that's why you should work with an advisor and consolidate your accounts so you know what you have,
and
so you can have a plan.
And make sure that you're properly diversified and not just having, I have lots of stock, so I'm diversified.
So it was interesting. Like I said, there was a lot of moving parts, and it's not uncommon. we've had other times we work with clients, and as we're doing the planning process, and all of a sudden there's more assets and things that we uncover. So we are here if you want us to revisit your financial plan, or if there's assets outside of what we're managing here, we're happy to take a look at that for you and see how it ties in with everything that you have going on. But we thought we'd share that with you this week.
Yeah, it was great. So we're 2 weeks out of tax season. So what we're officially in now is what's called notice season.
What is it?
Notice. So
now you get the notice?
Now we get the notices. So
gotcha.
You file the return. So I just wanted to encourage everybody out there, if you get a notice, don't freak out. just make sure that you send that to your tax advisor. And in particular, so we got a couple of really interesting notices this last week from clients, one of which was from the IRS, so that everybody files their taxes with the IRS, and some people file in different states. So there was an executive order that was issued this last summer saying that you, A, needed to pay online, and B, you needed to provide your bank account if you're getting a refund. Well, a lot of tax softwares said, well, you know what, it's okay if you still, get a paper check in the mail, but it can cause significant delays. And so the client gets the notice, and it specifically states on the notice, you're basically not getting your refund.
Oh, no.
Oh, wow.
Okay.
Yeah, so they panicked, of course. So if you get one of these notices, don't panic, because I did reach out to the IRS and they did confirm you will still get your refund. It just is going to be significantly delayed, and you might get a debit card in the mail.
A debit card?
But
That's cool.
don't use
but
it
don't
just
u-
yet.
I was going to
Right,
say.
exactly.
We'll let you know when the money's there.
So that one was interesting. So there's another one from the Franchise Tax Board of California. So if you live in California, this pertains to you. So I thought this was crazy. So client gets a notice. It's a balance due notice, and they're saying you owe, let's just say, let's call it $10,000. Well, the client tells me, but I paid this money, and here are my confirmations for these payments. So I call the Franchise Tax Board, and sure enough, they said, yeah, the balance due notice, that's correct, but do you have the confirmation numbers for your payments? So I give them the confirmation numbers, and she says, well, yeah, I see the payments sitting there, but they haven't been processed yet. And so I said, well, so what's my client supposed to do? And she said, well, it's going to be at least 2 or 3 more months before we're able to process those payments, even though they received them electronically.
Are you kidding me?
No.
What?
And she said, well, wait till they get the final notice and then call back.
Oh,
And why is it taking that long? I mean, what's the reason?
But but the money left their bank, so it's
Oh,
sitting
yeah.
with them. They just haven't
So they have
reported it yet. Oh.
So I
And
thought
they
that was
can't-
outrageous, but just don't panic if you get a notice from the Franchise Tax Board and you paid your bill. Wait for the second notice.
Is this the government working for you?
Sure.
state of California.
At its finest.
They've
So-
already spent
Don't
your money,
worry.
but they can't account for it yet.
Hey, we're the government. We're here to help.
We're here to help.
And it's just crazy because you pay electronically. They can see the payments, but they're not applying it to the tax account. I don't understand. But don't
Isn't
panic.
there a computer that does that?
I thought so.
Connect the dots? I mean,
So that's all I've got from the tax floor.
That doesn't surprise me in California.
So if you get a notice, don't panic.
Well, as we wrap up, there's still some more earnings to come. So hopefully next week we have some good
They have a
news.
big
for you.
one this
They
afternoon.
do. So we'll stay tuned.
and they've been pretty good. I think is it 80% of the earnings have already been announced,
Yeah,
and
they're
or
better
80%
than,
are
they're better than
beating.
they're better than consensus. Yeah.
Yeah.
No, they're
That's-
doing quite well.
yeah.
So it's kind of interesting because the Gulf War really hasn't put a big damper on the earnings.
I just
Yeah.
wonder if we're going to see the trickle effect later.
That may happen.
Yes,
Yeah,
like all of a sudden
yeah.
companies like, I can't deliver this, or missing, I don't know if we've really felt
There's
the
going to
impact of-
be some disruptions with all the length of this thing dragging out. I mean, not to mention some countries running out of gas.
Yeah, no, there was actually a big tech company talked about how their supply chains are being disrupted a little bit, and how some of their chips and some of their memory is being backlogged, and they just can't get enough of it to sell to their clients right now. So that could impact coming into Q2.
Well, we covered a lot today, so thank you for joining us today. Until next time, happy investing.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.